Good morning and welcome to the Legit Real Estate Podcast. I'm TJ Ciolfi. I'm here as always with Holly Regoli. Holly, good morning.
Good morning.
Special guest today we have from Lapointe Insurance, Bubba Correira. How are you, sir?
That's right. How's everyone doing today? I'm doing great. Happy Friday, all,
It's
and
beautiful
looking forward
outside
to
in Rhode
this.
Island right now. It is gorgeous.
It is.
Oh yeah,
It is. And I went tanning this morning because I'm preparing for a trip to Cancun and it's nice. I actually got a little bit of a tan.
that's awesome. When are you going to Cancun?
End of the month. It'll be
Nice.
fun.
Absolutely.
Yeah.
Get away, enjoy some nice
Do
weather.
I know about that? Do I have that on my calendar?
Yes, because you told me you're going to be in Florida at the same time. So I said, perfect.
Perfect. All right, cool. That's from all the hits we get on these podcasts that we're going on trips now in the middle of school. We don't care.
Yeah, no, my kids are on. Actually, no, actually, I'm leaving my kids with someone else. So
Look at you.
yeah, that'll be interesting. Leaving the country, my kids are going to be here. We'll
F
see
them
how that
kids. That's
goes.
awesome.
Yeah.
That's awesome.
So what do you got going on in the insurance world, Bubba? I know you were telling me some fun, interesting stories that you had, and there's some crazy stuff
Yeah.
going on with pricing and all that stuff now.
Yeah, so I mean, I think a good topic to talk about, like first, is Rhode Island home insurance for multifamilies. We talked about earlier, Holly. We had a mutual client that you referred over. My insurance rate was coming over like 6 grand. You know what I mean? The lender obviously needed it in the mid threes, which I wasn't able to get it there. With that said, the market as a whole right now in all the states that we write in, Mass, Maine, Vermont, Connecticut, New Hampshire, Rhode Island. Rhode Island is definitely at the peak, especially with these three or four families. There's limited markets available, and another challenge that we're facing right now. I'd say 90% of our markets in Rhode Island, they want home auto bundles. They're not willing to just write monoline home insurance. They're trying to obviously get bundled accounts because it makes the retention on renewal year after year more sticky, meaning they keep getting the renewals. When it's a monoline policy, clients are most likely, if their renewal goes up a little bit, they're most likely to shop. And in insurance, I would say it's a little transactional. You know what I mean? Clients get the renewal. If they want to leave, they do leave. But once again, they're trying to build relationships, and so are we, where the retention stays year after year after year.
Mhm.
That plays a big role in the rating. When you do go to shop it out, the longer you've been with your previous insurance company, the better rate that you will get. And that works the same way for auto insurance. So there's just these we're doing the best we can. These replacement cost estimators that we run on these three or four families where clients could potentially be buying them for, I don't know, 500K to 700K or so.
Mhm.
The replacement on the homes are over 900. You know what I
That
mean?
blew
So,
my mind. That
yeah,
blew my mind.
yeah,
I couldn't believe when I got priced out my house that I have in Connecticut. I only
yep,
paid $80,000 for it a couple of years ago. They said my replacement cost was over $900,000 because it's
yep.
so old.
How much? I'm sorry. How much did you say you purchased it for?
80,000.
80,000. It's a two family, three family,
It's a four family and I'm trying to
four
turn it into a
family.
five.
Wow. Yeah. So just to kind of dive in, excuse me. Just to kind of dive into a little bit more about like what we look for when we work on insurance quotes is we care about insuring a property to 100% of its replacement cost. With that said, if the home goes down to the ground and needed to be rebuilt, you need to be paid out with the funds appropriately to rebuild the same exact home that you had. With that said, how much square footage is the four family?
So that one's over 3,000, but the
Yeah.
my agent was saying like a lot of it is I've got the original wood trim. It's an old house from like early
Yep.
1900s and stuff. And the house that you quoted for my client, the insurance almost killed our deal. Like we didn't
Yeah.
have the commitment. We still don't. I'm due to get the commitment today, but we had to extend a couple times because the loan officers only accounted for $175 a month in the insurance price for a three-family home.
Yeah.
The lowest price we got back was $4,800 a year.
Yeah.
But you mentioned the bundling. I never even thought of that where now
Ye-
I know when my clients are buying a house, I'm not going to leave it to the loan officers to say, "Hey, get your insurance." I'm going to talk to them right away and say, "Speak to someone now because if you can bundle your stuff, you might get a better deal."
Correct. And that was what you said, if better deal. That's the truth about it, because with standard or with single family homes, it's definitely 100% we need to bundle. But when it comes to these 3 or 4 families, the standard markets that are available, they either want top dollar or they just don't want to entertain at all. So what we have to do is go with a surplus lines broker, Lloyd's of London. I'm not sure if you're too familiar with them,
Mm-mm.
or the Fair Plan Insurance. So with those markets, they don't allow any type of bundling discounts, but they're really, as of right now, the most competitive options that we have for clients with the way the market is currently in Rhode Island. You know what I mean? So some cases like that where you're going with one of those companies because your standard market wants 8, 9, 10 grand, or they just don't want to entertain at all. You have to go to these other markets where they're offering a competitive price for the situation. You know
Yeah.
what I mean? It's just like I said, we're really doing the best that we can, and setting realistic expectations for clients is huge. You know what I mean? Like if a client doesn't have an offer accepted and they reach out and they want to see like, hey, can I get an estimate on this 3 family in Providence, Rhode Island? I'm gonna estimate anywhere over $5,000. You know
I
what I mean?
I can't
For the
get over
year.
how high they are. The first price we got back on the 3 family was over $8,000 a year.
Yeah,
And the
I know.
roof. So I have learned now recently that they're really
Yep.
cracking down on the roofs. Now, I myself
100%.
have put in roof claims like on my multifamily. Because in Rhode Island and Connecticut, it's been standard that the insurance company has to, if you have a missing shingle,
Matching roof.
they
Yep,
have to
matching
match
shingle
it.
loan.
So if you
Yep,
have a shingle that blows off in a storm, I know I had done it with my roof because I legitimately could,
you
we're
got a whole
replacing
new
the whole
roof.
roof. So
Yep,
now this roof, the first thing my agent that I normally had used, I had her look at it. I'm on the phone with her. She's like, "What's up with the roof? How old's the roof?" They ask right away, "How old's the roof?" And if it's over, this one they said was over 25 years old. They didn't know how old it was, but somehow the insurance agent figured out is over 25 years old, or I think from the inspection report or something.
yep.
That was a driving factor in the pricing of the insurance because they want to make sure they're protecting themselves now, so people can't say, "Oh, I had a missing shingle and I need the whole roof replaced."
That's exactly what happened, and I think honestly that's mostly what to do with in Rhode Island too. You know what I mean? The weather conditions. Obviously, we've had pretty severe weather overall the past few years. I'd say the last 3 to 4 years, where, like you said, hey, I had a windstorm come, I lost a few shingles, rather than a client or the homeowner going and just replacing the 1 or 2 shingles that were missing from the roof. They get a roofing contractor involved, and they say, hey, we can actually replace this whole roof. The insurance company will pay for it. So
Mhm.
a $2,000 job or a $3,000 job now turns into a $25,000 job, and who's paying for it? The insurance company. And at the end of the day, insurance, it's a business. You know what I mean? Like they're there to profit and make money. So they have the right, if they want to, pull out of certain markets, rate policies, whatever they want to rate for them, as long as the commissioner approves it. And that's why I think we're at where we're at today. You know what I mean? That, and I would say like just pipe bursts, things like that. You know, it really, once these claims just start piling in certain areas, as Rhode Island, certain zip codes, these companies are going to rate harshly in those areas because they know most likely, yeah, they're going to file a claim and we're going to have to pay for it. So what happens is too, just to dive a little bit more, is insurance companies, they pay insurance on themselves, which is called reinsurance. So when these major losses occur in one geographic area where the insurance company has a lot of market share per se, they tap into their reinsurance companies. They tap into their insurance provider, and ultimately what happens is their insurance provider starts charging the insurance company more money. So how is the insurance company going to stay profitable? They're going to raise me, you, and everyone else's insurance rates.
That's
You
interesting.
know,
I never knew
yeah.
that was a component.
Yeah, so they have insurance on themselves. If you look it up, it's called reinsurance. But it's a way, obviously, they protect themselves. If something were to happen, major losses, they have money they can tap into. But once that happens, how is the insurance company going to stay profitable? Once again, people kind of misunderstand that insurance is a business. They're there to make money.
Mhm.
Obviously, in the event of a claim, they need to pay it out. Of course, if it's a legitimate claim, yes. But if they're not making money and their insurance is costing them more money, they're going to charge the consumer more money. You know what I mean? It's a trickle down effect. You
Yeah.
know, and these last few years, just they haven't been easy. What I will say is during COVID, no insurance companies were doing inspections because you can't have face to face contact. So a lot of these standard markets were getting homes that necessarily weren't the best appetite or the best fit for these companies, and they've had major losses. You know what I mean? So in COVID, like business, there was no inspections. You could literally just place business wherever you were getting the most competitive rate, no repercussions. But then they started getting hurt so much. And then after COVID, obviously they started doing inspections again. And if they wanted to pull out of a certain geographic area where they were just getting pummeled, they have the right to. You
And
know
they're
what I mean? And that
dropping insurances. I have clients that they went through four different insurance companies
it's
and
awful.
they said, "Oh, you have moss on the roof. Oh, now
Yep.
now you have to replace the roof or we're dropping your insurance." Like just, oh, letter of drop. Like,
I know, it's very tough. So one other like main point that I like to bring up is for a new purchase house, you have to get a new home insurance policy. You're not already the homeowner where your home's already insured. You don't have any headaches per se with the insurance, things like that. When it's a new purchase, you don't have a choice. You have to get a new policy. So when I am um, shopping them out where they're already the homeowner and they're just looking to get a better rate, I always stress the fact that, hey, I just want to be very transparent on we're in the hardest insurance market we've ever experienced. So most likely the insurance company is going to go out there and do an inspection. Yes, receiving you $300, $500, $700 on the premium, but there is a chance in the back end, the insurance company is going to say, hey, we want X, Y, and Z updated, or we're going to have to non-renew your policy, cancel it within 30 days, things like that. So you just want to think the big picture of the risk and reward. And I think as of right now, with the market that we're in, being an agent that can help separate yourself from others is being transparent and letting the client know that. You know what I mean? Because yeah, it's great. Hey, I'm saving you $500. No headaches. You're going to be good. And then in the back end, they get that inspection. Yeah, we want your roof updated. We want your heating system updated. We want X, whatever the case is. You know what I mean? So I think just having that transparent conversation with the client when they're trying to save money and it's not a new home purchase, it's very crucial. Even on new purchases, I let them know like, hey, they're most likely going to do an inspection unless it's brand new construction, things like that, where it's not everything's up to code. You know what I mean? They know everything's been updated in 2015 if it's built in 2015. You know what I mean? So it's ever evolving, and we're just trying to do the best we can. Try to
Ask you a
educate
couple
people.
things. Bubba, have they stopped insuring in our geographic area, or are you talking about other parts of the country?
So I mean, certain companies have. They pulled out
Yeah.
of they yeah. They pulled out of Rhode Island. They pulled out of certain zip codes in Rhode Island. I'd say that's pretty nationwide. We write in Mass, Maine, Vermont, Connecticut, New Hampshire, Rhode Island. Like I said before, Rhode Island is the hardest state right now for insurance. And what happened is, or what there was, or still is, but they took rate. Have you ever heard of the Rhode Island or the Massachusetts Fair Plan insurance?
No.
So what that is, excuse me, it's a state ran program and it's called the Fair Plan, Mass and Rhode Island, and it literally stands for Fair Access to Insurance Requirements. The Massachusetts Fair Plan, they haven't taken rates since I believe it was 2011 or 2012. So the rates that they were offering back in 2011 or 2012 are still the same exact rates that we're getting today with them. So
Wow.
imagine, yeah, but nowadays, excuse me, with the way the market is and everything's so elevated, the Massachusetts Fair Plan is offering us competitive rates for coastal homes year built prior to 1900. There's certain guidelines that have to be met in order for companies to want the business. So they haven't taken rate. Rhode Island just took rate. So my three families and four families in Massachusetts, on average, I would say is anywhere from 3 to 4K in that ballpark. Sometimes 4,500. Rhode Island Fair Plan now, average, I would say 6 to 8 grand
that is
because they
insane.
took rate. You know what I mean? And it's tough, but it's what it is too. It's a state ran pool where all these standard insurance markets pay into year after year to help provide funding for these homes that they don't want to entertain. You know what I mean? They don't have to insure you. The Fair Plan is the company that will.
And this
You know what I mean?
is for just multifamilies. The single families have a different kind of product, or am I mixing that up?
No, well, it depends on the condition or the year built of these three or four families. They're definitely overall tougher to insure than a single family, 110%. You know what I mean? Certain companies, obviously, with single families, they still have guidelines they look for that have to make the home eligible or the client eligible with their protocols, per se. You know what I mean? I'd say on average right now, a Rhode Island single family, always, like I said, I'm trying to get the home model bundles because it opens up so many more markets as these companies want bundled packages, not just monoline home insurance. I'd say on average, like 2 grand to 2,500 bucks for a single family home, 1,500 to 1,800 square feet. And then it's just like I said, it's
Why do the companies prefer the bundles?
because it makes the business for them more sticky. So in insurance, we look at retention. So insurance is a longevity play, I guess you could look at, where think about it. If I have or if an agency has your home insurance, your auto insurance, your motorcycle insurance, your umbrella insurance, and that's another thing I do want to touch base on is what umbrella insurance is, your boat, things like that. That's all placed with one agency in the same company. You get your renewal and it goes up a couple $100. You're not probably going to shop that out and leave that company because everything's already there. It's a headache, things like that. But if it's a monoline home insurance policy, meaning one, or just a monoline auto policy,
it's just like Verizon, right? If you raise your rate, I go to Cox.
Exactly. Yeah, you know what I mean. But when you get when you get the bundled packages, it makes it a lot more like the company retention rate is a lot better.
Got it.
You know what I mean? That's how they look at it. You know what I mean? They do look for loyalty. That does play a factor, especially with auto insurance rating. Like when we run the reports, it tells us how many years they've been with your previous insurance company. So if you're someone that shops year after year to save pennies over dollars, they're not gonna want to insure you because they know, like, hey, after this year, they're just gonna leave us. You know what I mean? But if they see you've been with your company for 3, 4, 5, 6 years, they're going to give you a way more competitive rate than someone that switches year after year.
I didn't know they even looked at those things.
Yeah, really. I didn't know that either.
That's more on the auto insurance side, but yes, 110%.
That's so
Absolutely.
crazy.
It pulls in the reports.
That's something a lot of people do. Like once a year, we're
know.
gonna sit down and we're gonna check subscriptions. We're gonna check apps we're paying for. We're gonna check cell phone carriers and cable carriers and insurance carriers. We're gonna like a lot of people do that, and they say, okay, well, I have Progressive. I'm paying $200 a month. Let's see if somebody else will give it to Allstate. Will give it to us for $180. Like people do. I know people that do that.
Yeah, they do.
Every time my cable bill, I am not loyal to anybody. Like that's just my practice. Yeah. I don't care. I'll switch to Cox for 8 cents a month. I do not care about Verizon at all.
But if you're telling me that I'm gonna,
I know that's gonna hurt me in the long term.
Yeah. If you're telling me I'm gonna make better rates by staying with the company, I'm gonna stay with the company.
They should tell you that. Jesus, that's a.
I don't know how it works with like cable or Comcast or Verizon. I don't know any of that stuff, but I can tell you with especially auto insurance, it plays a big factor in the rating. Hey, my policy went up $50. I'm going to shop it out. Now I'm breaking even from where I was the year before, when it's like, all right, well, what adjustments can I make? You know what I mean? Can I raise my deductibles to help reduce the cost? That's a big one right now. How can I save money? Raise your deductibles. As if you're going to file an insurance claim with the market the way it is right now, you want to make sure you're getting your money's worth because they're rating hard for it. It stays on your insurance history report for 5 years. They're going to hit you hard. So I always say, if you're going to file a home insurance claim, get your dollars out of it because they're going to rate for that. And when you go to shop it out, it stays on your report. Like you can see that the company knows,
Thanks for that tidbit of information.
I would say like this, trying to think of exactly when. We used to always offer like $1,000 deductibles and $2,500 deductibles when providing options to clients. Now, I mean, for the past, I don't know, I'd say 6 to 8 months, we're doing $2,500 and $5,000 deductibles because it's saving you money. You know what I mean? If anything below $5,000 is affordable out of pocket where you wouldn't need to use insurance, 100% do it. Save the $200, $300, $400 a year, whatever it is, because year after year, that adds up. And once again, if you're going to file an insurance claim, hit them hard for the money. Hit them hard. You don't want to just get a couple $100.
You know what that is a great point. You know what I also didn't realize though, this client that I had that I went and sent to you, we were trying to play around to get his insurance premium down. So we're like, oh, why don't we just go with a higher deductible? With he was FHA loan. FHA caps it at $2,500 a year, so you don't have a choice.
Yeah, I know there's certain guidelines, and if it's like Rhode Island housing is involved, I know it can't be more than, I think it's 5% of the face value. I forget the exact calculation, but I do know there's some loan requirements, like you said, where the max deductible is $2,500. That's all they will allow. Mm-hmm. So these options of going with a $5,000 deductible, they're to save the $300 or whatever. You can't do it because the lender won't allow it. Yeah. So everything in the real estate realm right now is just it's tough. Now,
do you think
many regulations, my friend? It's just regulation on top of regulation on top of regulation.
And do you think that the things like the wildfires and stuff in California are affecting us all the way over here? Just
100%. 100%, because it's a lot of these companies are nationwide companies where they write all over the United States. They're reinsurance companies that they use. They're all intertwined. You know what I mean? So the things happening in Florida and California, those major losses and those tragic events, it's going to impact rates for us because they're still paying for it. You know what I mean? They they want to stay, they got to stay profitable, or there's no point of them being in business.
Yeah. Well, it's definitely made me realize that I didn't think much about insurance with my clients. I'm just like, the lender usually tells them you got to go buy insurance, get it ready to go.
Yeah, with the
Now,
way the market is, it's so, yeah, it's challenging. It
I
is.
I know I have to talk to my clients and tell them, especially the ones looking at multifamilies, make sure we get prices now and make sure your lender is using that in your good faith estimate, because that blew us out of the water. It
Yeah,
screwed up
it
his debt
does.
to income so much that he almost didn't we had to do something, he had to take money out of pocket to get approved.
Yeah, I know it's challenging. It is. You know what I mean? It's just, I think if everyone, I think it's important to, like, the referral partners that I work with, I always let them know, like, hey, this is what I would be using for an estimate in this state for this type of house for this number of families. You know what I mean? Because I see it day in and day out. A lender's trying to do their best job to give an estimate on it, but when you're doing it day in and day out and you see these prices, I'm going to be able to help them more and provide more value and more accurate feedback to what should be estimated. You know what I mean? I have a really awesome referral partner, loan officer in Massachusetts. She called me and she said, "Hey, my number's on this type. We don't have an accepted offer yet. What's your estimate on the home insurance?" Because I think she was estimating, I forgot what it was, 250 or 300 a month, which is pretty good. That's a pretty good estimate for a three family in Massachusetts. And she was like, it's throwing my DTI off a little bit though, but I know that's what the insurance is going to come in at. So like her doing her due diligence, having that conversation with me, I assured her, I'm like, listen, like, yeah, maybe I could play with it a little bit to reduce the cost, play with some of the coverages, raise the deductible, whatever the case may be. But to be on the safe side, if you're trying to give a very accurate number, that's what I would be using, $300 a month for a three family in
The
Massachusetts.
worst would be losing a deal because the insurance estimate was off.
Yeah, we
Yeah,
almost lost the deal. He had to come out of pocket with an extra, I think, $15,000 to make it
Oh,
work.
yeah,
It's
oh.
crazy.
it is.
Crazy.
It's not like it used to be. I can tell you that. Like, I mean, three families in Rhode Island. I mean, you back in good days, you could probably do them for 1,800 bucks, 2 grand a
You know,
year.
it's funny. Most of the insurance
These are
policies for
gone.
multifamilies don't even cover you when the tenant tears up the apartment.
No.
Yeah, it depends on what the case would be. Yes and no. So
I mean,
when
I had an adjuster. I had this people leave me
you
with
could file it as
fire
vandalism,
rehab, like from floor to ceiling, and the insurance company was like, "Yeah, we tenant did it. We can't do it." I was pissed.
that you said that was Florida.
No, that was here.
That was here. What
Mm.
was the exact situation?
The tenants destroyed the place, so I had to remodel everything. Like I had to redo the bathroom, all the carpets, all the floors, all the walls. I mean, it was like
Wow.
starting from scratch.
I mean, it's under vandalism unless that's excluded on the policy, but that would fall under
It
vandalism.
didn't. In North Providence, the police won't come out and give you a vandalism report either. So while it was
Challenging.
gross, the adjuster that came, he's like, "This is disgusting,"
That's
but
awful.
it's not.
That's
And
awful.
it's frustrating.
That's very, yeah, I can only imagine how you felt. I totally get it. I
Yeah.
actually have another real estate
And the
agent
guy
that
was
works.
cool. Like he wasn't trying to be. He wasn't like standoffish, right? He was young, and he was like, "Listen, this isn't vandalism. It's just gross."
Yeah,
Um,
that's awful. I had another real estate partner in Massachusetts, kind of similar story, but the insurance, he did file a claim and they did cover it. Like he had a tenant, I think he was evicting them, and before they were evicted, they just trashed the whole unit, trashed
I
it.
never
Like,
even thought of using insurance claim on tenants like that. I didn't even think
yeah,
you could do that.
yeah, someone in our office, I was bitching about it. The tenants moving out, showing the video, and someone in our office said she had success with it before.
yeah.
You must have to make special note of that in your policy or something because my guy he sent
Some
me
companies will exclude
the thing
it.
and he was like, "Yeah, but you're on your own with tenants," which I feel like that's the only thing I would want to be insured of. Like the rest of
Yeah.
the it's like I don't
And
care.
and look at it through the insurance company's point of view too, right? Like if you have like part of the rating, once again, like why these multifamilies are so high. Think about a single family. Who's living in there? The named insured on the policy, the owner of the home, and whatever, their kids, their spouse, a family member, things like that. Someone like that is going to take care of their home more than somebody for a three family owner occupied. You got one unit, they're living on the first floor, the owner, and then the other two units, they're more or less they're strangers. They're just random people. Like who the heck knows what they're gonna do? You know what I
True.
mean? And then look at it on the reverse side of a dwelling fire policy where it's a full landlord insurance. They're gonna rate heavy for that because you're not even the owner of the house isn't gonna live there. You know what I mean? There's three random people living in your home that you own who knows? And Tom up the street, like they could just be a total nut job and just, like you said, destroy the place, whatever. Try to
But
start a
mostly they
fire.
just don't care. If
Exactly. When it's your own
I
home.
mean, no one cares about your stuff as much as you do.
Correct. When you own your own property or your own car, you're going to treat that a lot differently than, not you personally, but most people will treat that differently than if it's just someone else's house. Why do I care? It's not my house. I'm paying this guy $2,000 a month, which is a ripoff. You know what I mean? Like,
Right,
screw this. You know what I mean? Like, that's the attitude
It's so true.
some people get. You know what I mean?
Yeah.
And think about it through the insurance company's eyes. Like, if you're an insurance company, what would you provide a more competitive rate for, a single family owner occupied home or a three family?
No brainer.
You know what I mean? Yeah. Sometimes you just got to think through the insurance company's eyes and like what they're experiencing and how you would feel if you're the one insuring a home for $500,000 or $800,000. How would you look at it? You know what I mean?
Yeah, it just sucks for us as homeowners.
I know. I get it. I get it. I get it.
No,
The
oh, sorry, go ahead.
No, I'm sorry. I didn't mean to cut you off there. What I did want to tap into is if that's okay, if now's an okay time, is what umbrella insurance is. I think
I was just going to ask you about that.
Yeah. So that's something I really want to dive into. And I think it's very important for people to be educated on it. So what an umbrella is, you think about it, an umbrella like this, and it goes over you. So what an umbrella does for insurance purposes, it goes over your home policy and your auto insurance policy. So it's an extended liability policy. You can get them in limits of 1 million, 2 million, 3 million, 4 million, 5 million. That goes over the home and the auto in the event that a lawsuit that exceeds the underlying limits on either policy. So let's say your home insurance policy, you have $500,000. Bless you. Bless you.
We don't have a cough button on the set over here. We don't have a cough button.
So just to give you like another example and a way to understand what it is. So think of your home insurance policy. You have $500,000 in liability coverage. Liability protects you from lawsuits. So Tom up the street comes over to your house. You had a shovel in the driveway, tripped and fall, and he broke his neck in your driveway. I'm suing you. You left the shovel in this driveway. Like, what are you doing? Things like that. I'm coming after you for this. Your home insurance liability is $500,000. Let's say he's trying to sue you for $750,000. You don't have an umbrella policy, your home insurance maxes out at $500K. That's all you're getting. And then they're coming after you and your assets for the other $250,000. So what that umbrella does is that extended liability in case something were to exceed over that $500,000 liability threshold on the home insurance, where they would kick in for the other $250,000 rather than them suing you directly or taking over or going after your personal assets. Same thing with the auto insurance. If it exceeds the bodily injury limits on your auto insurance, where you got into an at-fault accident, you really injured somebody, and let's say your per person liability is $250,000, they're hurt for $500,000. Rather than them coming after you for that additional $250,000, that umbrella policy would kick in. You get a bundled discount on the home insurance for having it and the auto insurance usually, and the policy itself probably costs $250 to $350 for the year.
Yeah,
Is it something?
those on both. I've got those on my multifamily, like
Yep.
I've got them on my business and on my personal side.
Is it something you ever want to use? Absolutely not, because that means you're being sued for a lot of money. But when you have assets, when you want to protect yourself more, it's definitely worth looking into, because the discounts you're getting on the underlying policies, I mean, it practically pays for the policy itself. You know what I mean? So that's something I've been trying to work on more. Is just stressing it. Like, hey, we're doing your home and auto. Here's an umbrella. I know you're probably not too familiar with this. Give me 5 minutes of your time. I'll hop on a phone call with you to kind of explain it, why it's a no-brainer. You know, it's something you really should have to better protect yourself and your assets.
That's awesome. And then speaking of protecting ourselves better, I think I talked to I mentioned to you this yesterday. Somebody in my office had brought up when you have a house in a trust, that it makes a difference on what name is on the insurance policy. How does that work?
Yeah, so it depends on the company. Some companies will let you endorse the policy where you can put the trust as the named insured. Other companies will make you do it as an additional insured. So if something were to happen in there to the property that's owned in the trust, you need to make sure on the insurance that trust is listed, because the insurance needs to match up with the ownership or the deed of the property.
That's
you know what I mean?
really
In the
important.
event. Yeah. Same thing with like an LLC. You know what I mean? Like, some people put a property in an LLC. Sometimes they don't update their insurance, where, I don't know, say they own the property out cash. Like, they don't have a mortgage on it. Technically, when you don't have a mortgage, you don't need insurance. You're absolutely crazy if you do not. But they have their insurance in John Smith's name. They end up putting it in an LLC, things like that. They don't update the insurance. I mean, yeah, if a claim happens, they're going to look into it and be like, why do we have this in John Smith's name, not 123 Main Street LLC? You know what I mean? They want that to match
Makes
because it
sense.
needs to match with the ownership of the property.
Something I've never thought of until it recently came up. Now we're getting close to being out of time. We got a little bit more than 5 minutes left. And you did tell me a crazy story that I would love for you to share.
Yeah, it's definitely a little crazy. It wasn't my client personally, and I don't know the full spec. It was another team member's client where the owner of the home passed away inside the home where he was. I forgot, he was extremely overweight. So they literally couldn't get his body out of the house. So they had to come tear down the roof to make a hole in the roof and the siding
What?
and get a crane to get his body out of the home. I don't know exactly how that worked with the insurance end. Like the guy passed away. Who's going to pay for this? You know what I mean? I don't know the exact figures behind it or how exactly it played out, but I do know that they literally had to knock down portions of the roof and the wall with a crane to get the body out.
And the
I'm
insurance
assuming.
had to get involved, right? If it ended
Yeah,
up
because
in your
my
office.
my co exactly my coworker. I can ask him and follow up on him with like exactly how that played out. Like, did the insurance company pay for that? Like, how exactly is that looked at? You know what I mean? Because it's just a freak story and scenario where it's like that. Like, you just would never think of that happening. You know what I mean? Like, who would ever imagine that? You know what I mean? But the guy was just very big, and there was no other way they could get him out.
I
You know?
can't even imagine
Yeah.
that. I would
I
definitely
feel
be
like that claim.
curious.
I feel like that claim gets denied all day. Like you did it yourself,
Yeah.
Well,
I
think
would
about
assume.
it, right? When
right?
the
You did it
claims of
yourself.
this is, what is it? They exclude things that damages caused from things that have been long term. Like you knew about this has been going on, but like that's not like a sudden disaster. Like, I don't
No.
know. That's
I
Yeah,
feel like
crazy.
like
I feel like taking that sliding door that's on the back of that house and just making it twice as wide is probably easier
just
than
ripping
it is
it.
than
Yeah,
take the
they
roof off. I mean, there's got to be. How
no,
big
they
can it be?
literally I'll definitely confirm 100% the exact play out of it, but I know they had to tear down the wall and because I think he was on the couch. They just couldn't move the guy. So I think they literally they ripped down some of the siding in the roof and got a crane in there and pulled his body out.
I
That's
can't
crazy.
You
even
know what I mean?
imagine.
I
Like
can't.
that's probably the most crazy story. It wasn't my client, obviously, but it was the most crazy thing I've heard being in my 3.5 years of insurance.
You got to
I
come
just
back to us and tell us if they paid that claim.
yeah, I was kind of at a loss for words for it when I heard the story.
Like
I
you feel like
was
your roof's gonna go triple in size.
yeah,
Oh,
you
Get
know,
up
it's
to about 950.
I don't know if that would fall under maintenance. I don't know. You know what I
Hey,
mean? But when it
we're
comes
running out of time. Do this. Can you tell the people where to find you?
Yeah, absolutely. So we got our logo here. This is why I wanted to sit in this chair specifically. But our agency is Lapointe Insurance. We're located on 10 North Main Street in Fall River, Mass. We're an independent agency where we shop out home, auto, umbrella, commercial, whatever you're looking for. We don't do life insurance, but we do have someone in house we could recommend you to. And any way we could help, I'd be more than happy to. My personal cell phone is 774-265-2381, and my email address is bubba at Lapointe, LapointeINS.com.
I'll put all
Happy to
those in
be
the
a
show
resource.
notes too.
Okay, cool.
Yeah.
And
It's
like I said, I really appreciate you guys having me on the podcast today. It means a lot.
I definitely appreciate you coming on. We learned a lot of
A
things
lot.
that I did
This
not
is
know.
usually that's not our usual MO is to be over here learning things.
But
Yeah, I like to educate when I can. You know, I think that's important that people, whether you're in the real estate industry or not, like you have home insurance, like or auto insurance, like know exactly like what's being protected here.
yeah,
You
but
know,
we're learning real stuff, legit stuff about stuff. And these
Legit
are just
stuff.
so many things have changed with insurance so quickly. And the prices, I mean, I literally almost lost a deal this week because of the insurance. It's nuts. So I'll let everybody know where they can find us. So we are the Legit Real Estate Podcast. If you have any stories you want to share or want to come on the show, we love having guests. You can reach out to us at the Legit Real Estate Podcast at gmail.com. We are on YouTube and Facebook and TikTok and everywhere you can listen to a podcast. So if you don't find us where you listen to your podcast, let me know and I'll work on getting on that platform. It's all new to me, trying to get us technology and all that stuff, but I had fun today.
I did too. Keep up the great work, guys. And once again, I appreciate you having me on. Thank
Awesome.
you.
Thank you. You too. Have
to
a
meet
great
you.
day.
All right. You too, guys.
Thanks. Bye.
Next week, we'll see you, Holly.
Bye.
Bye.